Alright, so this video is for all my self-employed people, right? So it's just basically a video on certain things that you should expect or certain things that you should do based on tax administration Jamaica, right? So for a self-employed person, they are required to file a ITO 1 and a ITO 7 yearly, right? So every March, a ITO 1 and a ITO 7 should be filed. So the ITO 1 now is a final income tax return for the previous year. So you would file, so let's say we're in 2023 now, you would file the ITO 1 for 2022 in 23. The ITO 7 now is an estimated income tax return for the current year. So we're in 23 now. So you'll file a ITO 7 for 2023. All right. So some sources of income that would consider or make you a self-employed person. So for the sale of goods, if you're in a farming, if you're a taximan, a busman, if you rent an apartment or a house or whatever, if you get fees from the supplying of services or subcontracts, you would be considered as a self-employed person, right? When it comes to doing your income tax now, some deduction that's allowable based on TAJ or by TAJ includes the salary and wages for employees if you have any, rent for the business property, not for your house. If you took a business loan, you are allowed to claim the interest as a business expense, as well as overdrafts, insurance, transportation expense, and other expenses that you incurred in the production of the business income. So your water bill, your light bill, your telephone, the internet, and those things. Deductions that are not allowed now. So capital expenses are not allowed. Depreciation is not allowed because you're not spending money. Your personal expenses is not allowed, so you can't put in your light bill or your water bill or whatever, right? As a self-employed person now, if you have any assets within the business, you are able to claim tax allowances as it relates to capital allowances. So it might be annual allowance or initial allowance. As a self-employed person now, you are able to set off against future tax payable balances if you had incurred a loss. So say for example in a 2022 your business made a loss, in a 2023 now you can claim a portion of that loss in 2023, right? So you may set off this business loss against future tax payable balances, and you may be and it's possible for you to carry forward this loss indefinitely until everything has been written off to a zero balance. I've also included an example of just a basic example for the calculation of tax liability. So you have your total income of 6 million, your let's say expenses of 3 million, and you get your statutory income. Then you less the income tax ratio, which is the 1.5. Then after that you get your taxable income, and then you times that by 25% in order to get your taxation payable. Just a basic example, guys. It can get way more complicated than that.